Welcome to TradingMBI.com. This is John's report is for September the 11th. And yeah, that's all that needs to be said with that. It's been quite a few years, but it's still a significant day. And, you know, we had been looking at the DOC breakout here that was taking place at the cyan over green that occurred previous day, and the steel dipping. And so we expected that we might see some softness. And my suggestion was that it would be to the ABM yellow, and well, there you go. Went literally right to the ABM yellow. Was 29.60, the low 57.25, and of course we supported off of that because we're still in the broader rising red. But if that continues to go stronger, that really could generate a little bit more softness. Now we are in a higher pivot from the P3 that was going on here. So sometimes with this you could get 4 or 5 days of going across, but as long as you have green going in the wrong direction, cyan rising and steel falling, that's a little bit tougher for the market to move significantly higher, at least to sustain it. It can move up, but oftentimes then you get hit with a wave of additional shorting as that premium is easy to attack. NASDAQ's looking identical to it. In fact, it had a little bit more weakness, hit all the way down to the 61% range and finished below the 76. Euro's in a sideline because nobody knows what's going on with the European Union per se. Oil still maintaining, I'd say, elevated level, which still bodes well from a production standpoint. We haven't seen any collapse there. The weakness in gold we knew was about filling a lot of these positive extremes that had taken place all the way back through here. We have this lower target range right down there. And so a little bit of short-term buyer interest in there. We'll see if that's able to lift it. We did get a dip below the red line on this most recent one, so that's going to take some more time for it to even itself out. From a 5K standpoint, we started off with a nice little pump up that was sort of like a little faux move here, and then boom, we got DOC spread, and boom, right after that, the magenta candle, and that gave us, well, exactly what you would expect. Right at the 77 algo that we had before, we came down, dipped below briefly below the 71, and then it just popped back up to the 77 again. And once it got to the 71, there was just a continuation weakness. We still had orange in between cyan and red, and that just gave us new lows. Orange candle came in. It's like I talked about this before, when you don't have it coming off of a steel reset from underneath red. I usually look for a reset of the steel. So anytime that the steel was popping back up, which was at the zero lines, you could attack that, but without the additional pivot, like I was talking about before with the P2 in this particular case, came in strong over here. Still wasn't that great because, again, you still didn't have a steel reset coming down towards the red. So that was pretty short-lived. It was still decent from that entry point, and even coming all the way across until, well, cyan popped under red right over here. That was just below the 50%, and then broke all the way back up. Couldn't quite get back to the 77, and then we ended up with another little bit of selling that came across, and again, didn't really reset cleanly with anything, but you ended up with cyan, green moving over to the cyan in this particular case, and you're over the 50%, and then you had the blue candle there, and that's led to the move that's taken us right back to that same 77 mark, and we still have a significant cyan under red at this particular point with really clean rising shakeout. From our 50K standpoint, we weren't thrilled with this setup here, as it was pretty weak with cyan under red. I'm going to look at the conditions that looked for that, because sometimes on the Mo it looks for a little bit more detailed things, but we knew that coming off that dip, and this is why I was working with the extreme, coming off the dip to the extreme below the red line, and not having a new buy configuration is usually pretty weak, and so from the daily standpoint we called it pretty correctly. That it dipped down here below the red line, and then it started to improve as we got the rise above 13.5 from the red DOC, or actually 15. I think that happened a little earlier. We were at minus 16 there, and right in between this one, and that's what's given the slight elevation there above the Long Algo. So it's all decent. It's been really good action, I think, as far as range goes and that. So no complaints from that standpoint. I think that they're just everyone's still looking for a little bit of a solidification from the Fed as to are they going to be acting from an easing standpoint, or are they just going to be modest sideliners. So that's kind of leaving people a little up in the air, and I don't think that a significant call has been made other than to suggest that we're going to continue moving across and still with the slightly bullish unless we start to see a little bit more decay on that daily, which is right now what I would say kind of soft bullish, where you just kind of hold support when you dip to it, unless that DOC spread gets worse and starts to decline further. So that's what we'll be looking for. As always, though, anything unique or special, I will certainly put it up as I continue to make adjustments to some of these additional program setups. So we'll talk again later, and look for me on the Skype chat. Trade well.